So in this video, I am going to that is revision notes for economics chapter 1, that is introduction to macroeconomics. So let us have some revision so that it will be helpful to your exam also. It is revision notes, so you can revise before your exam for that. So the word macro, it is come from a Greek word that is mac, M-A-K-R-O, from that the macro word has came. That means large. It is the word macro, it means large. It is a branch of economics which is gives us the description and yes, tells us about the economic process that are involved here, that aggregate involved in the aggregates. The aggregate is a collection of economic subject. Aggregate, it is a collection of economic subject that have some characteristics. Its characteristics is common characteristics it has. Macro Macroeconomic emerged after a publication of John Maynard Keynes' book, that is Theory of Employment, Interest and Money. After publish of this book, macroeconomics is evolved in the year 1936. This branch investigates the economic relationship or issues. It investigates the economic relationship or issues that affect an economics in as whole, such as savings, total consumptions. These things we will learn. Now in investigate now economic agents, that means it is a individuals or institutions making economic decisions are referred to as economic units or economic agents. It is an individual or institution which makes economic decision. They are referred as the economic units or economic agents. There may be different types like economic. There may be manufacturing or service provider who decides what and how much to produce, or there could be entities like a government, corporate, banks that could make economic decisions such as how to spend. I mean, how much we should spend, what should be the interest rate on the money we are giving to the loans, or credit charges, how much we should take, how much tax we should take, and many things they will decide. These comes under economic agents. Next is Great Depression. So Great Depression. The Great Depression is widely regarded as the worst and longest economic downturn on or recession in modern history. In modern history, we can call it as a recession. It was started in the United States. It then had a cascading effect on the world's economy. The Great Depression is set. It has begun in October 1929. Stock market crashed in the United States. To be more specific, let us say the stock market crashed on October 24th, 1929, which became known as Black Thursday in American history. It is known as Black Thursday in American history, where the stock market crashed in America on October 24th, 1929. It is also an important question. Next is the stock market crash caused panic among Wall Street investors, causing the stock market to lose nearly billions of dollars. So this caused stock market to lose billions of dollars of money. This resulted in the failure of major financial institutions in the such as banks and many financial institutions was caused. Uh, the depression was caused by an overabundance of food grains in the market, which resulted in a drop in agricultural prices. So during the war, Canada, Australia, United States emerged as a new alternative wheat producing center. They were producing more wheat during World War. During the war, and stocks of finished goods began to pile up because of underconsumption. Because of underconsumption and excessive investment, resulting in low prices. As a result, low profit margins, and money in the economy was converted into unsold finished goods, resulting in a sharp drop in the employment. And as a result, income levels fell drastically, and the economic demand for goods was as low that production was reduced. That resulted in unemployment in the United States. It was increased from 3% to 25%. It was increased, and the Great Depression has its own set of implications and significance in the economy. So let us see the flow chart that summarize the cause and effects relations of the Great Depression. Low demand first, then overinvestment it will happen, then low level of employment, low level of output, low income, and low demand. And low demand. These are the effects. Next is capitalized country or economy. In a capitalist country, capitalist enterprises perform a majority of production activity. A typical capitalist enterprise has one or more entrepreneurs. They may provide the capital required to run the enterprise themselves, or they can borrow that from others. And according to Ralph Waldo Emerson, doing well is the result of doing good. That's what capitalism is all about. This is the words Ralph Waldo Emerson said about the capitalism or capitalist. In this type of economy, the means of production is privately owned, it is owned, and profit is driving force behind these means of production. So behind this, profit will be little bit less. This economic structure is also referred to as a free market economy or laissez-faire. Capitalist economy it includes Hong Kong, Singapore, Canada, United States, United Arab Emirates, Ireland, and other many countries also comes under this. Then is important characteristics of capitalist economy. Characteristics are like this, like private property, no government interference, profit motive, freedom to enterprise, freedom to ownership, flexibility in labor markets, and consumer sovereignty and price mechanism. These are the important characteristics of the capitalist economy. First, let us see that is revenue. It is the amount of money earned from normal business operation and is calculated by multiplying the average sales price by the number of units sold, or by multiplying the average sale price we find the revenue earned from a normal business operator. Next is investment expenditure. Invested expenditure it is also known as it is defined as expensive incurred by an individual, a business, or the government for the development of new capital assets like machineries, buildings. For that, this is known as the investment expenditure. Next is wage rate. So the wage rate is the price charged for the sale and purchase of labor service. For sale and purchase of labor service, the price charged is known as the wage rate. Next is wage labor. It is defined as the labor that is sold or purchased in exchange for a wage rate. Next is the entrepreneurs. An entrepreneur is an individual who takes the risk of starting their own business based on the ideas or the products they've developed, and assuming most of the risks and earning most of the gains. Is known as the entrepreneur. Is known as entrepreneur. The main objectives of this macroeconomic policies is macroeconomic policies are implemented by government or some statutory bodies like Reserve RBI or the Secretaries and Exchange Board of India, that is SCBI. So and other similar organizations that have sustainability, price stability, full employment, and external balance and social objectives. These are the main objectives of macroeconomic policies. For major sector of macro sector of economy from macroeconomic point of view is household sector, business sector, government sector, and the forest sector. So now let us know. So it is also a four function overseas for expenditure or gross domestic product. So household sector, it is this sector covers everyone, consumers, individual, and every member of the society. The household sector purchases uh, products and services for consumption, while also supplying producing inputs such as land, labor, capital, and entrepreneurs. Next is firms. The people in household sector work as workers in the firm and make a living. So firms, they are the economic units. They produce goods and services. Next is the government sector. A government preserves law and order. They promote growth and stability and also administrate the government services. These things the government sector works. And for foreign sector or the external sector, this sector deals with the export and import of the product and services. And export occurs when the domestically produced goods and services are sold in the rest of the world. So these are the revision notes. Revision you can do. These are the basic things you want to know in the macroeconomics chapter, and also it is the important things you want to know, so you can revise these things. These are the important things while you are going to write the exam or of economics. You can revise these things, revision notes. So if this video is helpful to you, give a like and also share my video with your friends so that it may be helpful to your friends also. So okay friends, I'll see you guys next video. Till then, take care, have a nice day, bye bye.